Heya Cryptozens. Tonight's show. MakerDAO cuts Aave's DAI supply. Grayscale's trust issues. FBI and LinkedIn fight crypto fraud. It's 10 p.m. Pacific time. The date is June 18th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Take a minute, go ahead and subscribe to the podcast now, because we're here at 10 p.m. each and every night, so that when you leave the house in the morning, you're taking with you the crypto news analysis that you need to start your day. And keep in mind, nothing in this show should ever be considered financial advice. As a measure to protect the protocol, MakerDAO cut Aave off, because apparently Aave had the ability to generate DAI without collateral. Now, MakerDAO, of course, the group that kind of shepherds the Maker protocol, and the Maker protocol being what powers the DAI stablecoin. As we like to do on this show, let's take a look at the numbers on the DAI stablecoin. At present, it's slightly off its peg, coming in at 99.97 cents per. It's ranked number 12 overall, has a market cap of just more than $6.7 billion. Fully diluted market cap is about the same. Trading volume is up 65% in the last 24 hours, so people are clearly transacting in it. As you can see, DAI is soft-pegged to the US dollar. It's a collateralized mix. It's got a group of cryptos put together to hold its value. And these get deposited into smart contract vaults for every DAI that ever gets minted. This is different from something like the Terra USD algorithmic stablecoin that just collapsed, taking down the whole Terra Luna blockchain. It's not like Justin Sun's algorithmic stablecoin, USDD, which is still off its peg no matter how much money Sun pumps into it. There's another token involved, Maker, but unlike the Luna to Terra USD relationship, these are governance tokens. They don't give value to DAI in any way. So if the price of Maker goes down, that does not change the value of DAI. Now, Aave is a lending platform. Aave, which means ghost in Finnish, was launched in 2017 and rebranded in 2018. So they've been around for a while. And as you can imagine, lenders put money into liquidity pools. Borrowers use their crypto as collateral and take out loans. One of the things that they are known for is creating the flash loan. That's an uncollateralized loan. Now, the trick of this kind of loan is the money must be borrowed and paid back in the same transaction. Well, right now they're cut off. MakerDAO cut off what is called the DAI Direct Deposit module. This was announced via Twitter from the MakerDAO official Twitter account. The DAI Direct Deposit module controls the variable borrow rate for the DAI market on the Aave lending platform. Well, that borrowing rate has been set to 0. That means they can't mint fresh DAI into Aave. It was in response to market conditions that a couple of proposals came out. One proposal was put forth by Aave. It was designed to freeze the Lido staked Ethereum, and the proposal called for increasing the liquidation threshold for staked ETH to 90%. It had been set to 81%, but that was recently changed on May 19th. Aave's governance proposal passed. That one froze USDT on Aave and decreased their loan to value on staked Ethereum to 69%. Now, Aave's proposal was put together by Gauntlet. And Gauntlet is a financial modeling platform. They said, quote, Aave's current market liquidity is very likely sufficient to handle expected liquidations in the protocol, and no immediate parameter changes or risk mitigations are necessary. Well, none of that sat well with MakerDAO, because in short order, Maker's risk core unit, well, they had their own proposal, and that's the one we're talking about tonight, because they weren't happy with Aave pushing up their liquidation threshold on the staked Ethereum to 90%. They called it a, quote, unacceptable risk to the Maker protocol. This proposal, which went into effect last Friday, said, quote, the Aave DAI pool currently has enough reserves right now for MakerDAO to withdraw. If the DAI reserves become empty, Any periodic DAI repayments from other borrowers will be snatched quickly by bots, and a protocol like MakerDAO will be locked in for a long time. Primos is a Maker Core unit facilitator. He is also part of the Risk Core unit team. He said, quote, "The reason we believe this is risky is because out of the 200 million DAI borrowed on Aave Ethereum, 100 million DAI is being borrowed by Celsius and collateralized mostly by staked Ethereum." He went on to say, "The beauty of D3M," and that's the DAO direct deposit module, "the beauty is that we can react in time unlike other vaults, so we can turn it off instantly." And so it stands. Aave's proposal was ultimately rejected. Even so, MakerDAO has turned off the tap. The DAI direct deposit module is set back to 0, at least for now. In a couple of weeks, they're going to meet and see about turning it back on. Now, frankly, I think if Aave, being a lending protocol, in these times, if they can make it to a couple of weeks from now, maybe they'll turn that module back on. Because the way things are going for lending platforms right now, making it is not a given. At the time of writing, the global crypto market cap is $818.99 billion. It's down 7.5% in 24. The top 5 cryptos by market cap are Bitcoin down 9.93%, Ethereum down 11.77%, Tether, USDC, and Binance Coin down 8.9%. If you were ever greatly enamored of the idea of owning shares in the Grayscale Bitcoin Trust, maybe now's the time. But then again, maybe not. The reason I say this is it's currently trading at a discount of 33.75% compared to the price of spot Bitcoin. Worst it's been since the trust was formed. So it might be a bargain or it might be a dog. Okay, so the Grayscale Bitcoin Trust. It's a way to let investors trade shares. These are shares of a trust that holds pools of Bitcoin, and each share is meant to track the price of Bitcoin. It's a way to let people get in on the price action of Bitcoin without actually buying and hodling it. Here's the problem. Since February of last year, the share prices haven't kept up. The shares are trading at values lower than the Bitcoin that those shares represent. According to Grayscale's website, that's a total asset value of $13.3 billion. Now, here's the problem. The trust has a 6-month lockup. So if you buy shares today, you have to leave it in that trust for at least 6 months, no matter what the market does. Whether it goes up, whether it goes down, 6 months. Now, you might be saying, hey, I'm not a big fan of that. And I'd be right there with you. And it seems Grayscale knows that it is currently an unpopular scheme. So they have a plan. They want to convert their trust to a full-on spot Bitcoin ETF. They said that's the only way to pull this off. They argue that it's in the best interest of their investors because it makes it cheaper, because they charge a lower management fees for an ETF, and also it's easier to get your money into and out of an ETF versus a trust. The U.S. Securities Exchange Commission has failed to approve a spot Bitcoin ETF to date. There are a number of futures ETFs, but every single spot Bitcoin ETF application has been denied. It goes back to market manipulation. Gensler and the SEC are always worried about market manipulation amongst the crypto traders. And so it came to pass that in October of 2021, Grayscale formally applied to have their trust converted into a spot ETF. They said they want to, quote, force the SEC's hand, which is what they're doing. Now, since then, it's been delay after delay out of the SEC. Well, they don't have much more time. Deadline is coming up in July to either approve or reject. And Grayscale, taking no chances. They've written to the SEC. They've encouraged other people, random schmoes like you and me, to write to the SEC. They've threatened to sue the SEC if they don't get approved, and they've hired a big name to help them do so. Donald B. Verrilli. Now, Verrilli's career includes previously serving as a Solicitor General for the U.S. from 2011 to 2016 under the Obama administration. In that role, he took on dozens of cases, arguing the government side of things in front of the Supreme Court. That said, it may not even come to that, because Grayscale has an ally within the SEC, Commissioner Hester Pierce, affectionately known as Crypto Mom in the SEC. She's been a force for good in the SEC, taking up the cause of crypto for years, and she's still doing it. She's issued a statement about the lack of response from the SEC, and the way she writes it, she doesn't sound like she's a member of the SEC. She sounds like a concerned outsider looking in. She wrote, quote, "It's time for the commission to stop categorically denying spot crypto exchange traded products. Spot ETPs have launched in other countries without incident and with great investor interest." And she's exactly right. The global NFT market cap is up over $12.24 billion. Sales volume is down 5.37% in 24 hours. According to CoinMarketCap, the top 5 NFT collections by sales volume are CryptoPunks, followed by Bored Apes, Mutant Apes, Sneakerheads, and CloneX. Now keep in mind, some of these collections have very volatile prices, so do your own research. The FBI has a new partner in their fight against cybercrime, LinkedIn. You see, there's an issue. Scumbag scammers are rampant on LinkedIn. And everybody knows that crypto Twitter and Discord are some really scammy places. But LinkedIn should be different. It should be professional. It should be respectable. It should be safe. It should be a place where you can trust. Unfortunately for investors and job seekers alike, LinkedIn isn't safe as it should be. And so, the FBI and LinkedIn are partnering together to take the scammers on. If you were to talk to FBI agent Sean Reagan, he'd tell you that the bad actors are, quote, significant threat to job seekers and investors alike. And he said, quote, "This type of fraudulent activity is significant, and there are many potential victims, and there are many past and current victims." Now, I keep saying investors, even though LinkedIn is a job site, but there are a lot of people who go to LinkedIn that are interested in investing, cryptocurrency included. And these are not insignificant numbers either. One group of victims told CNBC that they were hit for losses ranging from $200K to $1.6 million. And they're good. They're very convincing. They don't come at you asking for money right away. For $200,000, they're willing to take their time. These are the long cons because they're hoping for a $1.6 million payday. Now, I've run into some of them on LinkedIn myself. So they'll show up in LinkedIn, very professional looking, a sharp portfolio, all pure fiction, of course. But that's how they get in. They start off with the small talk. Nothing sketchy, nothing to draw suspicion, and then they make an offer. They go from small talk to an offering a way to make money through crypto investments. And now they'll act like they're moving slow because they don't know how much they can trust you. But what's really happening is that they are building up trust over the course of months. They're pretending not to trust you so that you will trust them. And then they'll offer you a good special deal, a guaranteed moneymaker. Just go to this site, invest your money, and you'll be rich, right? They work in pairs sometimes. One to play the friend and build the trust, and then the other's the closer. They play the role of the person that you have to convince to let you invest with them. No. You invest that money and it's gone. And this kind of fraud is on the rise. According to Agent Reagan, they have active investigations on just this kind of scam. Of course, they won't comment on active investigations. He did say, quote, "They are always thinking about different ways to victimize people, victimize companies, and they spend their time doing their homework, defining their goals and their strategies and their tools and tactics that they use." Now, for their part, LinkedIn has acknowledged the problem. In a statement, they said, quote, "We work every day to keep our members safe, and this includes investing in automated and manual defenses to detect and address fake accounts, false information, and suspected fraud." To that end, while LinkedIn won't provide an estimate of how much money has been stolen from members on their platform, they did say that more than 32 million faked accounts were removed in 2021. That's from their semi-annual report on fraud. And in that same report, they said most of the perpetrators have been traced to the South East Asia by the group Global Anti-Scam Organization. Well, that's going to do it for us tonight. Thank you so much for joining us. If you enjoyed tonight's show, like, comment, and subscribe. Give us a glowing review because that helps other people find their way to this podcast. Do you have questions or comments? Reach out and let us know. The email address is nick@cryptoovernighter.com. That's nick@cryptoovernighter.com. Or come find us on YouTube. Leave me a comment and maybe I'll read it into the next episode. You stay safe out there. You watch out for yourselves, but watch out for each other too. We'll see you tomorrow night.